All right, is it recording? All right, perfect, awesome. Welcome everybody. This is RajaBanks, your host for the New York sessions. This video is going to be a sort of like a breakdown on the build up I did from 50,000 to over like $1 million in profit on the new platform, Dominion Markets here. So with this, we really tested everything with this, right? We tested the liquidity, we tested deposits, we tested withdrawals, we tested news events, we tested buy stops and sell stops. There was some slippage with news, which is expected because the orders move really fast, and like the best price is not achieved because it's a news event, right? But other than that, everything was perfect. There was no latency, zero latency actually. There's no lag. The executions went smooth. Part of the fact because there's MetaTrader 5 used, as you can see right here, say MetaTrader 5 Pro account. At the same time, so now let's take a look at it from the start, right? So let's go all the way up over here. So going all the way up, we started this on the 31st March. There was a deposit done of about $1,500. We did another deposit of about 48,500, bringing it a total of 50,000. There was a withdrawal done. This was a test withdrawal for $500, and then from that point onward, we started trading it just like as we would trade on any other platform, right? So basically started with around 5%. So the goal of this video is not to show the gains or the amazing trade strategy we had. No, we're not going to talk about that. We're going to talk about the risk used and how the lot sizes were increased as the balance increased as well. Because the biggest problem, the biggest question people have is like, hey man, listen, my balance is increasing. I don't know what risk to use, what lot size to use. So the number one thing that you're going to see in this little video is going to be how the losses were kept small, which is I think which is one of the most important foundations of growing a small account. Well, 50,000 not a small account, but like let's say we're talking about a $500 account or a $5,000 account, right? The basic foundation is to keep your losses small. What I mean by that is like whenever you're trying to take a trade, you understand what risk you're going to use in that specific trade, right? What's the amount that you're risking, right? And then what are you doing if trade goes against you, right? Because the whole idea is to make sure you lose less than what you plan to lose, right? So if you look at the some of the losses here, you can see this was a $58 loss on a one lot. We had a $400 lot on a 10 lot. Now this is very interesting because when we take a look at these losses here, how small these losses are, you can look at the $1,700 loss on a 20 lot. Now basically, when we talk about the stop losses, majority of the stop losses were kept like 10 pips, 15 pip stop losses, sometimes 20 pip stops, right? But majority of the time they were 15 pips. So when we talk about a 10 lot, and when we talk about, okay, if you have a 15 pip stop loss on a 10 lot, that means you're risking, let's say, approximately $1,500, right? If you're risking $1,500, what are you doing when you're in that drawdown to make sure instead of losing 1,500 you lose less? You lose less than 1,500. Let's say you lose $1,000. Now your risk is ultimately really crunched down from not losing 1,500 but only losing $1,000 or $700. Like the whole goal is to lose less than what you plan on losing. So let's start to move down, and there was a big withdrawal down about 38,000 in May. So let's talk about some when we increased the lot sizes here, right? So we started with about 5 lots, we went to about 5 lots, and then we went to about 10, 15, 15, 20. So this is where we started hammering in the 20 lots, right? This is the 19th April. We started this on the 31st March. So around in like maybe, I think, disregarding the weekends, this was about in like maybe 12 days in, 13 days in. So we're going to take a look at the balance on 19th April. And because that's when the first 20 lot was open. So we're going to look at the 19th April here. Oh, looks like we logged off. Okay, let me just log back in again. All right, here we go. Let's look at the 19th April here. We have March, April. Okay, so 19th April, we're looking at around, I would say, $79,600, right? So the balance was 79,600, and that's when the first 20 lot was opened at that time. So let's say the 20 lot risk was around $2,000, right? 10 pip stop loss. So 2,000 divided by 79,600. This is about, 2.5% risk. But this goes to show that we're not always losing 2,000. We're losing less than 2,000 all the time. If it's a 20 lot, we're losing less than 2,000. We're losing about $1,700, $1,500, right? So this was a 2% risk. So we can look right here, right? So this was a $2,000 loss. This was on the 21st April. Then there was a $1,700 loss. So till 19th April, grew it from 50,000, went towards 79,000, almost like a 80%, 70% gain, something like that. But all this kept the risk the same, right? Small risk. Okay, so let's go to the end at this point. Let's go to the end at this point. So this has been the end result so far, right? Profit was around, total profit was around, not looking at commissions, 1.2 million. Commissions were 51,500. Total balance 779,000. Deposit 50,000. Withdrawals were $451,000. So let's look at the first time we used 50 lots, right? That's what we want to look at this point. So let's go down and look at the first time we used 50 lots. So you can see the dates here on the 19th May. 19th May, we had like 20 lots, 10 lots, 20 lots. This was still, the count was over 100,000 at this point, right? Sometimes, would use 2 lots because wasn't confident in a trade. So use 2 lots, small lot size, no shame in that. Use the 0.5 lots at this time too. I think at this time I was testing US 30, but didn't really work out. Whatever, right? So use the 15 lot this time, 10 lots. You can look at the losses here as well. We got a $300 loss on a 15 lot, $300 loss on a 5 lot. We got a $1,000 loss on 10 lot. This was a full 10, 11 pip stop loss at that point. So I want to take it over to the first time we used so we had a 40 lot right here. I want to move on to the first time we used a 50 lot. So the first time we used 50 lot was right over here. This was a bigger trade. This was a pound yen trade on the 21st July, right? So we're going to take a look at the balance on the 21st July, and then we're going to see what type of a risk was at this point. So 21st July is going to be 21st. So we're looking at 21st July. The account balance was 440,000, right? 440,000. So let's take a look at this right here. All right, 440,000, 44000. Actually, we're looking at 50 lot. So 50 lot, let's say 5,000 divided by 44000 comes up to like 1.1%, right? 1.1%. But at the same time, you can take a look at this, how the account was grown, right? There was still 13 lots, 10 lots. We had a 5 lot, 20 lot at this point. Moving down, had a $25,000 withdrawal. I was still looking at June at this point. Haven't really gone up the lot size. We had some pretty decent wins over here from the 35 lot, 40 lot. Had some losses. The main thing is to look at the losses, right? So this is a $1,100 loss on a 20 lot, right? $1,100 loss on a 20 lot, right? It's very, very small compared to where the account was at this point. I think at this point the account was at like 400,000, 380,000, something like that. We had another $1,000 loss, another $1,000 loss, and then we had a $600 loss, $900 loss on a 30 lot, and then this was a pretty bigger loss at this point, right? Sometimes when you're trading, you tend to let your trades go. Right? When you're going in negative, you're like, it's going to come back. You kind of like stretch it. But the whole idea is not to stretch the trade so far that you get in trouble, right? Getting in trouble means that once trade goes in drawdown, right? It goes in drawdown so much that there's no pulling back from that. Like mentally, you're thinking, okay, you know what? I have a $50,000 account. My trade is in a drawdown at this point. The drawdown is like, let's say 5,000. Should I cut it? Absolutely, you should cut it. If you're thinking that, okay, like, you know what, I'm gonna cut it when it comes down to 3,000 drawdown or 2,000 drawdown, it's never gonna work out. 80% of the time, it's going to continue moving further and further away and more drawdown, right? It goes towards 10,000 drawdown, 15,000 drawdown. By that point, it's way too late. You have to cut it short, right? And most people really break their backs doing that, thinking that, okay, like, it's going to come back, and it doesn't come back, right? So this was one of those trades where I took a $4,000 loss, where it was a 20 lot, and I think I lost like 20 pips at this point. Normally, I would manage risk, but I guess this was the day on 2nd July where I was confident it's going to come back my way, or, I'm very, very, my confidence is just at a point where I'm like, okay, like, what, I'll just let the whole position run. If it goes in my favor, I'm going to make a big bank, but if it doesn't, I'll still cut the trade short. So you can see this is why it was like a $4,000 loss at that point. This was a pretty big win over here on a 40 lot, with still like, around 350,000 dollar mark area, still under like 2% risk, almost at 2% risk. Moving down, I wanna talk about the first time there was a 100 lot dropped over here, and okay, it was right over here. Dropped the 100 lot. This was a very, very, very big trade. I truly enjoyed this trade. I think it was a swing sell on gold. It ran overnight. You can look at the time. This started at around 8. Around after Asian Open, this trade was taken, and this was closed around close to pre-New York, right? So it ran overnight, right? It was a 100 lot. We're going to take a look at the balance on the 27th August, and then we're going to calculate what the risk was that was used here. So 27th August, we're going to take a look at the balance over here. 27th August is, let's see here, 27th August, 26th. Okay, it was right here. Let's say around 550,000, right? We're looking at about 550,000. So 550,000. Oh, actually, let's say we had a 10,000 loss, 100 lots, and if let's say your stops are like 20 pips, so you're looking at around $20,000 loss divided by 550,000. That should be a higher risk, 3.6% risk, around 3% risk, right? So this was a high time frame trade, which is why your risk is a little bit higher, 3% risk, but it's still extremely low compared to where you want to be, right? At the same time, you can see how there were also many losses here before as well, right? And the excuse me. The point to note is that whenever there were losses, it wasn't the fact that, okay, we should continue trading to make those losses back. If we total all these, now this one day or these 2 days where I had a specifically hard time trading, right? So what we're going to do is we're going to add up these all losses, and we're going to see what was the total loss at this during these 2 days. Okay, so the first one was 130, so we're gonna start with 130. It was 130 plus, then we had a 248 plus 1,000 plus we had a 631. We had a $9,800 loss plus 980. We had a 7,100 plus we had two 3,700s, 3,700s plus 3,780. One was, yeah, so this is around $27,000 loss, right? $27,000 loss. If you take a look at what the balance was at this point, it's like 20th of August. So looking at around 20th of August, I think the balance was around, I would say, 20th of August was around 460,000, right? So 460,000, 27,000, so it was like 27,000 divided by 460,000. It was like a 5% loss, right? So needless to say, even though this was a higher loss in those 2 days, right, the loss was divided in 2 days. It wasn't like 5% loss was attained in 2 days. It was like around 2%, let's say 2.5 or 2.3% was done in 1 day, and then 2 point something was done in the next day. So every day when you're coming through the charts, you have a percentage in your mind that, okay, if you're going to trade in a certain day, what percentage of your account are you willing to lose in a certain day? It's not like you're coming to the chart saying, okay, like, you know what, I'm just going to try to make some wins today, or I'm just going to try to see if I don't lose enough. No, the goal is to understand how much are you willing to lose in a certain day, and then just sticking to that risk, right? That works all the time. That keeps your all ducks in a row, and you have to be very, very patient, right? You have to look at it this way. This is not a week long challenge. This is not a 2 month long challenge. It's like a 6 to 8 months, right? If you can attain discipline of 1 to 2 trades, 2 to 3% a day in 6 months, in 4 months, you're going to see a massive, massive change, right? So let's move on over here. There was a bigger withdrawal done of about 280,000 on the 9th September. And then let's keep moving. We had another bad day. This was on CPI, where the buy stops and sell stops were both executed. I remember this precisely. This was on gold. CPI. So you can see right from here, we had 14 September, we had a loss, another loss, another loss, another loss, and a $33,000 loss, and then an $8,000 loss. So this was all done on the 14th September. These bad days, they do happen, right? But when these bad days happen, so you can see this was a sell, 33,000, sell stop was executed. Then this was the buy, where the buy stop was executed, right? When these accidents, I would say, they happen, you don't have to make these accidents back, because sometimes guys say, oh, like, you know, I lost a lot of money, so I'm going to make this all back, right? So let's calculate how much total loss was done here. So we're going to calculate from 1750 on the 14th. Yeah, let's calculate from 1750. So 1750 plus 4100 plus 2575 plus 1475. Oh, 1475 plus we have another 1425, and then we have a 33,950 plus 8850, right? Man, to be honest, I never imagined I'd be calculating these bigger number losses and saying, you know, things happen. But you know, as you progress in life, as you progress in accounts, it's expected, right? So this was total of like a $54,000 loss, right? So we're going to take a look at what the ending balance was on the 16th September, where we started on 16th September. So when we go right here, we're going to go towards 16th September. This was like a 300, so we did a little withdrawal over there. Let's say 14, let's say we're around, I would say, 340,000, right? 340,000, 54,000 divided by 340,000 comes up to like 15%, right? So lost around 15% at that time. So things happen, right? When that loss was done, it was no trade after that. You can see right here, I think it was the weekend after that, 14th. Let's take a look at the calendar here. After 14th September, it was the weekend. 14th. Oh, actually took a day off. Took 15th off, and then came back on the 16th. Right. Had a bigger win over here. Had a 40 pip win. Had a 60 pip win. So this, and then we had, like, you know, came back strong, went back in the strides. Did another $1,000 withdrawal, and then had one of the biggest wins so far of like, you know, this whole year. It was a 134 pip win. This was a buy on gold. Very happy with this trade. You know, this trade basically put everything on the map. So when we go down, and then, you know, started doing smaller lot sizes at that point, and then coming close to where we are at this point, like, you know, now you can see we did like 10 lots, 10 lots, 10 lots. Like, you know, just trying to see how much can we deal with dynamic risk, right? So the reason the lot sizes are not cut down from 100 lots to 25, 25, 25, and 10, 10, 10 is to try out dynamic risk, right? Dynamic risk means when you enter a trade in the anticipation it's going to move in your favor, and if it retraces, you're adding positions to that trade so that it continues going your way, right? So the main thing is, man, at the end of the day, you have to manage risk. You can see right here, 25 lot, $1,500 loss. This was let trade go at this time. This was a gold buy, you know, had like whatever, like a 40 pip loss over here in gold. But you know, the risk was still managed. You can see right here, 25 lot, $900 loss, $960, $870 loss. We can take a look at this $500 loss. We had a four pip loss on 100 lot. And, like smaller wins over here, there too. Like, we had a full 10 pip loss on a 50 lot. So the main thing is, as you look at that account, don't look at it in a way that you're going to do the same thing. You can do much better, And when I say you can do much better, not because you can grow an account faster, or you can grow an account much bigger, from the point of you can manage risk better. Aim to manage risk. At the end of the day, we are not in control of how much money we're going to make from the markets. We're not in control of that. The only thing we're in control of is how much can we lose in the market, right? That's the only thing we're in control of. How much possibly can we lose, whether it's more or less, because that's something we can control, right? If price goes in drawdown, it's in our full control that we can close the trade out. If price goes in profits, then that's what it is, right? And then you use your technical tools like clean candle to the left, or whatever you want to use to see that, okay, how far can price go? Can you add positions? This and that. So at the end, what I'm going to end this video is going to be from is going to be something very important, right? And this important thing, I think if people do use this concept, I think you will see a change 110%. In 3 months, 4 months, 5 months, 110% you're going to see a change. Focus on 1 or 2 trades a day, right? If you have a losing trade, make sure or look to see how you could have done better in that trade, right? What could you have done differently? Did you enter too early? Did you enter too late? Was there something you could have done differently so that the next time the same opportunity happens, you don't make the same mistake? If you have a winning trade, look to see how you could have taken more advantage of the winning trade, how you could have, like, added a position, how you could have, let's say, if it was a losing trade, how could you have, like, given your trade a second chance? Because more time what happens is that when price goes in your favor, you miss the trade and you're like, oh man, I missed the trade. But when you look back, you can 100% see how you could have given your trade a second chance, right? Third thing is, when you have a losing trade, it's okay. Losses happen. Make sure that when you focus on 1 or 2 trades a day, 1 to 2, maximum 3%, go over the weekend, go over all your trades, all the trades, go over those trades and see how you could have performed better, right? And I trust you from the bottom of my heart. I want everyone to succeed. The reason why we do the live streams, the reason I did this video here was to make sure everyone succeeds in their own, like, what's the word? At their own pace, but at the same time, please get disciplined and you will see a change, and we're going to see you guys there when you do see a change. I hope this helps. This whole video should be a eye-opener for some people who are not disciplined, for people who are new to this video and first I'm hearing about me. Well, I'm the host of the New York streams now. So take care, everyone. We shall see you soon.